What's going on, everyone? It is Paul, the 920 Trader with 920 Trading and Trading Decoded. Today is Monday, February 26, 2024, and this is how we traded SPY today. So, first thing we're going to do, we're going to look at that pre-market high sitting up here at 508.66, followed by the pre-market low, 507.03. So, I'm looking at this thinking, what do we got? We got $1.40, something like that, $1.43. Somewhere right around in there. Decent, that's plenty to work with throughout the day. So we also had a few other zones that we're dealing with. We had some 30-minute zones. 508.43, 508.34. These are really, really close together, folks. So we got these two levels right here. 507.73. If we got another zone down here, 507.39, that will play out later in the day. Another 30-minute zone down here, 507.17, followed by a few more zones just a little bit lower that once we break out of that pre-market range, may hit, may not hit. So let's get into the regular part of the trading day. So here we go, right out of the jump. Got that cross to the upside, failed to get through, bounced around right on that pre-market high, 508.66, 508.66 up here. And I said, folks, hey, if we fail to get through 508.66, we might want to consider something to the downside. Had a couple folks take this off of the rejection, 508.66. I said, you know what? I'm going to wait until we do something, maybe a double cross. I want to get into that fishtail. Again, the fishtail is the space between the 9 and the 20. So I took this fishtail play right in here. We were 13 minutes after open at this point. I like to go at least 10 minutes. But 13 minutes, that's fine. Took this cross to the downside, got through the POC, got through VWAP on this next candle. The POC was probably right around in this area, somewhere pretty close. So cross to the downside. I had this first target low, 507.73, and I said, you know what? Let's go ahead and take our trade off the table at that level, get that first one in the bank. Now, remember, if we get a candle that closes below our target, so it closes below our target, we're then going to use that target low as resistance and wait for the 9 to catch back up. It didn't happen, so we took that couple of bounces off that level, rejected off that 507.73, and started running right back up. Test VWAP, test VWAP, test VWAP. Nothing to the upside here, no confirmation. Again, took this... Nothing, didn't take the cross to the upside. Again, looking to breach levels. We have to breach levels, obviously the upside. Back to the downside, I said, okay, we've got a double cross to the downside, and we are directly below VWAP. We probably had the POC in here as well. So we would consider that a death cross to the downside. So we've got the 920 cross, we've got the VWAP, breach of the VWAP, and a breach of the POC. Those four things right there. And that's a really good recipe for a nice little trade back to the downside. So again, took this trade to the downside, finally got that cross, waded through a little bit of garbage in here, went negative here for a few minutes, but again, was looking for this same target back to the downside. Not as much in this trade. Whenever you get a trade that goes against you, primarily or particularly, when you're dealing with options, is when they move against you harder than when they move in your favor. So took the trade off again at that same level, 507.73. And guess what happened? We had another cross to the downside. And at this point, I'm thinking, okay, if we can get below, remember, if we breach below a specific level, hold on to the trade, wait for your 9 to catch up, and then ride that 9 down to your next level. Well, took this trade right in here at 1042. I had one of the members say, what gave you confidence in that play? Well, I trusted my 9. That's what gave me confidence in that play. And the fact that we were making lower highs kind of gave me a little confidence that we could move through this zone, 507.73, down to our next zone, 507.39. And then pre-market low, targeting pre-market low. Again, 507.03 down here. So from a technical standpoint, I'd say this was a pretty good technical trade. Could have taken a couple minutes earlier. Maybe a rejection off of VWAP would have been a fine entry. It would have been a really, really good entry. But, it's kind of pushing up a little bit at that time, made a little bit higher high over here, rejected off that. Anyway, came back down, really, really nice trade, rode the 9, back down to my target, 507.03, back to the downside. Bounced around, hit this 507.73. And again, these are 30-minute zones. Remember this. The higher the time frame, the stronger the level. So it can be a 5-minute, it can be a 15-minute, it can be a 30-minute, it can be a 1 hour, 4 hour, but the higher the time frame, the stronger the level. Now, when you're using higher time frames, those tend to cut down the noise a little bit. So instead of watching that 1 minute all the time, switch to a 5-minute chart. Look at the 3-minute chart. Again, we're using those for trend confirmation to say, okay, I am able to, based on this higher time frame, stay in this trade a little bit longer than I would normally stay in it based on the noise on the 1 minute. Now, there are a lot of really, really good traders who use exclusively the 1 minute. They scalp 1 minute trades all day long, and they do very, very well. But my preference is to stay in those trades and use those higher time frames, again, for trend confirmation. Little scalp in here, 3-minute scalp, somewhere right around in here. Again, looking for that same pre-market low. Got another decent one back to the downside, but what I didn't do, I didn't play anything to the upside. So we had a cross here, cross here. I missed all this in here, folks. I missed every single play back to, and at this point, it had been a really, really good day. We were pushing lunch hour. I think we're at 12:30 right in here. Missed all these plays in here. And I thought, you know what, if we get another cross to the downside, let's see if we can take another cross to the downside. So we had a cross up here, missed this cross right here. Wasn't going to take this cross, because we're making lower lows at this point. So I'm thinking, okay, get across to the downside. Let's take it and let's see if we can get another good trade. Been a very, very fortunate day because it's been good trades today. There were some chop areas in here, folks. No question about that. There was definitely some chop in here. I want to move through this pretty quickly, though, because I want to show you something. I want to show you volume profile. Volume profile should still be active for about the next 3 minutes or so. But anyway, took this cross to the downside and rode it. Had another, getting through all these different levels down here, 506.12, a 15-minute demand zone. Now, this level right in here, this was a 30-minute intraday double bottom. So it actually printed 30-minute double bottom right in this area. But I was looking for this 506.12, followed by 506.86. Could not get that candle close below that 506.12, so we take the trade off the table. Missed every single play back to the upside, missed the plays to the downside at this point because, it's been a really, really good day at this point. And again, I just want to move over here just a little bit further and show you volume profile. And it's going to be active for about another 2 minutes. Volume profile. Here's what it is. Number one, we have this yellow line. It's called the POC. That's the point of control. That is the point at which most money has changed hands during the trading day. This shows you where your volume has been traded based on price. Okay, so in areas of heavy volume, you have bigger nodes. In areas of thin volume, the nodes aren't as big. So the folks in the group, I'm constantly saying, okay, folks, we're getting ready to get into an area of thin volume. In areas of thin volume, you can expect quicker moves. So thin volume moves, generally speaking, move very, very quickly. Once you get into heavy volume areas, price tends to slow down because there are more positions being defended. If you use TradingView, and if you use TradingView, this is one of those indicators that, in my opinion, it's my favorite indicator of them all, volume profile. Volume profile KV4 coins. It is, in my opinion, the best indicator move to use because you can anticipate where those moves are going to happen. Now, here's the double-edged sword. That is thin volume. Remember, heavy volume, slow moves, thin volume, quick moves. The double-edged sword about the thin volume is it can move down quickly and it can move against you just as quickly because, again, there are fewer positions being defended in those thin volume areas. Heavy volume, slow, plodding moves, As you can see, these areas of heavy volume, when you hit these thin volume areas, boom, look what it does. Look how fast these things move through these areas of thin volume. And you can find this on all of your different time frames. But again, here's the POC right here. We rejected off the POC late in the day. This is the 350 candle. And look what it did based on that 350 candle. It just dumped. So it took out this 15-minute demand zone down here at 506.12. And then again, 506.86 down here, other 15-minute demand zones. Let me show you that on the higher time frames so you can see very clearly these demand zones sitting in here on the 15-minute. These are targets, folks. That's all these are. These are targets. Now, if you switch to the 30-minute time frame, this is what you see. You see our next line down is going to be that 505.25. So use all of your different higher time frames to give you a better picture of what you're looking at. Now, remember, the higher the time frame, the stronger the level. But 15 is a really, really good indication of a rejection zone, either to the top side or to the downside. So always be aware of where your 15 and your 30-minute demand zones are. And the same thing to the upside, 15-minute supply zones up top. But anyway, that's kind of how she played out today, folks. And again, I feel very, very fortunate that I was able to do the video early enough to be able to show volume profile. It is very, very important. And again, if you have TradingView, use volume profile. It is one of those things that once you get the hang of it and once you look at it a few times, you will not go back to trading without the volume profile. But that's how she shook out today. It was a good day in the markets, folks. It was a really, really good market. Good day in the markets. We had one report that came out at 10 o'clock today. Existing home sales came in worse than expected today. Is that the reason for the sell-off? Maybe. Don't know. We just play what's in front of us. Now, if you like our videos, please go ahead and like and subscribe, and don't forget to turn on your notifications. That way, when we drop new content, you'll be the first to get that content. Also, if you're interested in live daily trading, the link for our trading Discord is down below. It's called Trading Decoded, the best Discord in the world. Let's see. If you're interested in the 920 crossover strategy, head on over to 920trading.com. All of the information is there. Everything is there. You can also sign up for our free weekly newsletter. So thanks for spending a few minutes of your precious time with us on this glorious Monday afternoon. I hope everybody has a great day. And above all else, I hope you followed your trading plan today. So we're going to do this again tomorrow. We're going to trade tomorrow, and we're also going to have a recap video at the end of the day. So again, thanks for spending some time with us today. We hope you have a great day, and we will see you in the markets.